You don't have to. My name is Paula Chavez, and we are going to have a special training today as part of our Tuesday night meetings. Today, I figured we are super diligent and super always so committed to learning about our business, but there's also another business that we have. I learned this from my business coach. He says you have two businesses, your business and your money business. And I am normally not a numbers person. I've always fought it. I always, when my husband talks about budget and this and that, I'm like, oh, no, you handle it. But there's only so much I can't ignore the topic. I've learned that as you start making income, you want to, and maybe some of you are like at another level, not like me. So I'm just being honest, and if maybe my story relates with any of you, then just know that you're not the only one, and there's always opportunities to learn. Today is one of those. Last week, I was chatting with Cindy on the phone about we're starting an LLC and all these things because it is important at this level, and at some point, some of you may already be there. Some of you may, at some point soon you may need that. So we were talking about that, and I said, Cindy, would you be open to doing a training for the team? I know I'm always getting questions about taxes, and I don't know, I feel like we all should be equipped for personal knowledge for our teams. And it also empowers us. I feel like when we feel confident about what we're doing and having tools, it's just gonna make us stronger, more powerful, and we project that. So yay to knowing more, understanding more about our income as small business owners. There are a lot of advantages, right, for having a business, whether it's super profitable or not. You still have benefits to it. So without further ado, Cindy is our accountant, Cindy Ketchum. And how do we pronounce the firm, the accounting? Wait, let me unmute you. Ask to unmute. I think you have
Say
to
unmute for me. Okay.
Yeah, there you are.
It's Kuberneo. It's K-U-B-E-R. So it's Kuberneo. It's a Greek word. And the idea behind it, the firm's founder wanted to name it this. Kuberneo is a Greek word meaning that you make small adjustments can result in huge changes. It's kind of like a ship going across the water, the ocean, and they can make a small little adjustment and it will completely change where they end up. And so that's the same thing with, with our businesses, is that little tweaks. And that's very much what we do. And what I do is to help you just make small tweaks that can make huge mammoth impact and not only just where you end up, but how you experience getting to where you're going as well, with less stress.
I love that.
Yeah,
that's interesting.
That is the name of our firm, and we're in Orlando along with Paula here. So, so where's everybody else from? Can you give me a taste of it, or
can you guys type in the chat? Where are you guys at? We also have some Canadians, and I had a question. I don't know if Jen, you're here. She asked me, yeah. I feel like maybe things are not the same in Canada, but I'm for sure.
It's going to be different, but it's still the same idea. It's still general ideas. Yeah.
That's what I thought. And, also the possibility of those of you guys that are Canadians, you may at some point build an American team, right? And have American teammates. We're just like, that's don't throw away. So yoo-hoo. You have these tools here. So Cindy, thank you so much. I won't interrupt too much.
So I'm going to share the PowerPoint. So I'm going to share the screen. So I think you're going to have to enable that, Paula. Enable, because it says host disabled participant screen sharing. So I think you have to enable my ability to share a screen. You know how to do that? Anybody know how to do that? Oh, wait, here it goes. It goes. Now I got it. You see it now?
Yeah, it's right there. I see it. You
You
guys
see
see
it?
the screen?
It says all things taxes for business owners like you.
Woo.
Let me know if everybody can't see it. So the idea is what I want to talk to you guys about. Again, it's not just taxes, because I do believe that what I really am passionate is helping small business owners like yourself to understand that taxes is just a piece of the pie that enables you to do what you do best. Kind of like Paula says, I don't like numbers and all this stuff. Well, I would venture to say, because of where you guys are in your organization and what you're doing, this isn't really your jam. This isn't really what makes you tick. It's really what makes very few people tick. But so what we want to do is be able to equip you and with knowledge and awareness and tools that will help you make this manageable, so that you can maximize what you do best and and have this done as efficiently and quickly and easily as possible. And the little image there, the little plant growing out of money, that's kind of like my philosophy, is that money is just a means to life, and that we want all these things to bring life and growth and happiness and joy. It's not the objective, it's the means to the objective. And so that's kind of what this is all about. And again, I just want to say it's a real privilege to be a part of this and to be invited to this great group. I was just so impressed talking to Paula last week with what she's done over just a few years. Is that right, Paula? Just 2 or 3 years, right? And
It's, well, I can't take all the credit. It's this is, I mean, if you know,
oh, well,
the
yeah.
industry, it's a team effort, but yeah, when I joined, and we were already working with you when we were with our previous company, and
Right.
it was actually funny to be able to, oh yeah, not funny, but to be like, yeah, it's like working out. What? You're like, what's going on? What are you doing?
Right. She's doing something right, guys. So, and you're in good hands with her. I am sure of that. But we at my firm have developed a bit of a niche with a lot of these MLMs. And so we kind of know what you're looking for. We know sort of what you're thinking, and we know what works best, and how to kind of achieve it. So what I want to help you do is make your tax life easy. It's not going to be cheap maybe, but I want to make it to where it's efficient. You understand it, you're ready for it, you're prepared, you have tools in place that makes it easy, because otherwise it can be like a ball and chain. I've had clients with MLMs come to our firm and say, I've been with, this company for a couple of years. I'm doing really well. They've just boomed. Their income has just skyrocketed, but I haven't filed my tax return in a couple of years. Like, they haven't even filed it. They'd have no idea. And you do them and they owe like $100,000 in taxes. And it just becomes this ball and chain that it makes it really difficult to get in front of. And so that's not what you want at all. And there's ways to get around and the ways to navigate that, but it's not definitely the objective. So whenever I say tax life, you think, okay, what's a tax life? I don't even know, do I even want a tax life? But a tax life basically is just being prepared with the puzzle pieces. I kind of look at this as a puzzle that you need to put together. You need to have all the pieces to come together and make a big picture, right? You need to be making decisions that are maximizing what your money is. And we're going to talk more about what is your money. So you want to make decisions that are maximizing that. You want to be aware of what is your money, what really is my money, and have a working system that helps facilitate paying those taxes easily, filing your, staying in compliance with governmental and regulatory standards. Sometimes different states have different rules. Different states have different taxes. And different countries have different rules and different taxes. But I think when it comes just to some of these things, I would say that generally speaking, everybody's kind of in the same boat with a lot of it. So whenever I say, what is my money? Whenever you get paid by Zaya, that is not all your money. what your money is, what you've made after the taxes have been paid, right? And so what's not your money? Your income tax, self-employment tax, social security tax, Medicare tax, state income tax, all these types of things. And so you don't want to spend what you don't have. And therein lies the big problem that you can get yourself into being a subcontractor type of income with Zaya. Is that a lot of times the money, you get the money in and you think it's yours. You think you have all this, but it's not. You cannot, it's going to have to go back to Uncle Sam at some point. So in order to understand this a little bit more, I wanted to dive in just a little bit. So this may be really simple, and you guys, many of you guys probably get this, but I want to kind of just magnify it just a little bit because some people don't get it, and it really needs to kind of like sink in with the magnitude of it. So when you are working at Zaya, you are a 1099 worker. You're an independent contractor. You're not an employee of Zaya, right? And as a 1099, that means at the end of the year, you get a form from Zaya that it's called a 1099, and it lists what you made, what they paid you all year. If you're an employee for a company, which many of us have had W-2 jobs, that's more the traditional way. They give you a form called a W-2 at the end of the year, and it shows what you've made. But as a 1099, you are responsible for paying those taxes and to the government really all throughout the year, quarterly, in order to avoid penalties. You can deduct, the good news is that you can deduct business expenses off of that income to reduce what your taxable income is. And I know that that's a lot of your big questions. I know that a lot of people want to know what about all these deductions. We're going to talk a lot about that. That's going to be a big part of what we're going to talk about tonight. But just put a pin in that right there. So this is what I want to call the gig economy. You know, this is the big up and coming way that so many people now are working as 1099 subcontractors. They're going, they do a little bit on this on the side, they do that on the side, and that's how they're working. And they're working, especially now everybody's working from home and doing things like this. So that's where you guys are, right? So now, what are your puzzle pieces? Let's go back to when we were talking about what your puzzle is. Your puzzle pieces are your income, also known as revenue. Like some people, you might hear that word revenue. That's kind of like your top level income, the money that's coming into your bank account from Zaya. And again, that's going to be found on your Form 1099 at the end of the year. You can probably also imagine that Zaya has other methods for you to kind of log into your account and track what your earnings are throughout the year as well. Your deductions are also known as what your business expenses are. So in other words, the government is saying, okay, you're earning this money as an independent contractor. We're going to give you, you also are probably having to spend money to make this money. You're having to buy product samples. You're having to pay fees. You're having to pay Zoom subscriptions, things like that, that are necessary in order for you to generate this income. So we're going to let you take that off. We're going to let you subtract that off of that top level earnings income to give your taxable income. And that's the taxable income. That's the amount that you want to try. That's what your taxes are being calculated on. So your taxes are like a percentage. And that percentage varies, again, it's not a same percentage for every single person. It has a lot of different variables that go into that. It depends if you're married, if you have kids, if you, what state you live in, all kinds of different things like that. So, but anyway, that's part of that puzzle, that's how you calculate it. And then your tax liability, that's what you owe. That's how much you owe to the government in taxes. So that's a real broad, simple kind of terms that you just kind of need to be aware of. So you kind of know what people are talking about when they're asking you things. Now, again, I also just want to mention one thing. We're strictly talking about business taxes here and related to your business. There are personal tax deductions as well, such as your home mortgage interest. things that have to charitable deductions and things like that, charitable contributions. Those aren't necessarily what I'm talking about here. That's a whole other piece of the tax return, but sometimes people get that kind of confused. So I wanted to make sure you probably, again, are probably aware of this, but I wanted to make sure you understood this, especially some of you that might be kind of new. But this is your income. So when you're talking about your income and you're like, well, how do I find that? Well, again, the Zaya is going to give you a 1099 that you see here. I'm going to see if I can zoom in on this so you can see it.
This is in January, they send us the 1099s.
Right. In January, they'll send you that. So you'll see this, and then right here in box 7, you'll see where it says non-employee compensation. That'll show how much you owe, right? But on whoops, wrong way. Wrong way. Here we go. Zoom in. This is a W-2. If you're an employee, you get this. Now, so what do you see is the big difference between the two? Well, the W-2 has a lot more blanks, a lot more numbers on it, right? So it shows you federal income tax withheld, Social Security tax withheld, Medicare tax withheld. See, all these taxes are automatically being taken out of your income if you're working a job as an employee. So you're already paying that. So when you get that income, you're pretty safe to say, well, that was my income. But that's what I'm saying here is that when you get this income as an independent contractor, none of these taxes have been taken out. You're responsible for paying them in and for estimating what they are. And that can be kind of intimidating, especially when your income starts growing, which you all want to do. And there's such potential with this company, with Zaya. I have just seen, we have a lot of MLMs we're working with, but your company has such potential. And I just really want to encourage you guys that to stick with this and to follow whatever Paula's doing, because
let me just say, I did not tell her to say that.
No,
right?
she didn't.
That's, oh my
No,
God, what?
But it's obvious. I did a little bit of research too, and this one is definitely on the cusp. Like some of them are at different trending points, and this one is at a really good point right now. So you guys are in the right place at the right time, I think. So even more reason to kind of pay attention to a lot of this stuff. So I just kind of want to throw in right here, this is a little bit of a random tax tip, but because this is a question we get a lot about, is a separate bank account. Do you need a separate bank account to put all this stuff into? You don't have to. It's not absolutely required. Now, if you were organized as an LLC, a formal organization, and we'll talk more about that later too, you do. But if you haven't done that, it's not necessarily required, but I would recommend it. It really helps with tracking things. It really helps to know where your money is and what it's going and how profitable your business is being. Because if you have everything mixed in to, say you have another job, an employee, where you're working a W-2 job, you're doing this on the side, you have your groceries, you have your husband's money coming in, everything's mixed. It's really difficult to tell, am I making money? I don't even know how much money I'm making, because you're spending money and you're making money and you're paying for all these things. So if you had a separate bank account that you had your Zaya money going into, and you had all your expenses associated with that, any travel, any meals, subscriptions, your product costs, advertising, anything like that you're paying for coming out of that, it helps you to see, well, this is my bottom line. And then you could just periodically, maybe monthly or bi-weekly, you could transfer money from that account into your personal account, kind of like paying yourself. It really helps you to have your arms around it a little bit more. And it helps you track everything so much easier for tax time. So let's go back now to the big hot topic of deductions, of the tax deductions, and how it impacts what your money is. When I say what your money is, the deductions, the amount of taxes that you pay is directly related to the amount of your taxable income. Remember when we talked about that, right? And your taxable income is directly related to the amount of your earnings less those deductions. So you can see that the more deductions you have, the less you're going to have as a taxable income. So understanding and tracking your tax deductions is vital. But I do want to make one point. You don't want to necessarily want to spend all this money just to get a tax deduction, because this is just, you're already doing it. You're already spending money. You don't want to spend more than you have to. But it's just taking advantage of what you're already doing. So here we go. Here's what some examples of tax deductions, also known as business expenses, that I have found are associated with businesses like yours more than anything. Advertising. So that would be anything, maybe you're doing your website, you're doing marketing, you're doing things like that. Your car, track your mileage on your car. You'd be surprised how much that will add up. Maybe in previous years more so than this year because of COVID, but the government gives you 57.5 cents per mile as a tax deduction. So if you're going to meet someone at Starbucks to talk about your business, if you're going to Office Depot to look for office supplies, if you're going to the post office to mail stuff, to mail products to people, if you're doing anything that's related to your business and you're driving to a location for that, those miles can be considered business miles. So there's apps that you can put on your phone that can help facilitate tracking that. Some people kind of keep a log. It's all up to you, everybody. I don't like to necessarily force people down a lane on that because there's thousands of ways to keep track of it, but the idea is to keep track of it. Product samples. So I know that for your business, you need to buy the product, right? You're using it, you're having to have testimonials about it. You have to validate, you're doing social media posts about it, things like that. And you have to own the product in order to do that. So that can indeed be a tax deduction. Now, the thing about it is it does have to be somewhat reasonable, guys. You can't just sit there and you have to, like if you were ever asked, you'd have to be able to support the idea that here, I use this in this social media post, see, or something like that. So you have to show that this was indeed required.
That you're attempting to generate business, right?
Yes, that you are generating business from buying this product. Generally speaking, clothing is not a tax deduction. In other words, say you were a fitness trainer and you wanted to deduct your leggings. You couldn't. Even if your shoes, you can't, because the argument can be made is that you can use it somewhere else. But the difference for you guys is that you actually sell those things, that you're promoting those things. You're a representative of that product, so that you can. Now, you can't necessarily, if you're not using it and you're just using it for your own personal use, you're not supposed to use it as a tax deduction. So it's more that product sample kind of idea, and that would be the category that I would put that in. Training, any kind of training costs that you're doing. If you're paying people to help you learn things, Paula, you mentioned before your business coach, things like you're paying her, or, that would be the, any kind of things like that. Subscriptions, the Zoom subscriptions, things like that you're paying for. There's so many of those little $9.99 a month, $29.90 a month, things like that are coming through our bank accounts. Your phone, internet. Now, the phone and internet, you have to keep in mind, I know that those are like your lifeline on your business, but say you have, internet in your house and you can't necessarily say 100% of that internet is for the business percentage. So a lot of people will say, okay, I'm going to say 50% of my internet is for business purpose. And they'll just kind of like allocate it like that. Your phone costs could probably be pretty high up there as a business expense. Maybe not 100%, but you might want to say 90%. So a lot of times what I would tell people to do is, sure, you can pay that out of your business account. But at the end of the year, whenever we're doing your tax return, or when you're doing your tax return, you might want to take that component and say, okay, I'm going to consider 90% of this. I'm going to consider 70% of it. It sort of depends on how much of your time you're putting into this business. You know what I mean? Computer can definitely be a tax deduction. Office supplies, printer, keyboards, iPads, things like that, any of that kind of stuff. Office furnishings, a desk, a chair, a lamp, even just decorative type things in an office space can be a tax deduction. Business incentives. Now, I'm not exactly 100% how you guys work that, but I know a lot of MLMs, a lot of times your upline will reward your downline maybe when they reach certain levels or certain goals, and we'll give them a gift, we'll give them an award, we'll give them some recognition based on achieving a certain level. Do you guys do that? Do stuff like that?
Yeah, we do. And there's also sometimes like we'll do a team challenge and there's a prize.
Right, exactly. Team challenges, giveaways, things like that. Basically you're trying to incentivize people to achieve, and you want to recognize that. And so any kind of cost associated with that can definitely be a tax deduction. Legal fees, accounting fees, travel.
Also for customers, like if you're doing, right? Like I don't know if it's to incentivize purchases. Maybe
yes, yes.
If you give something to like a price, you
right.
do doing for. Yeah, sometimes we'll do. I've seen like, okay, for every 10 leggings that I sell, we'll draw one, and one customer will win a pair or something.
Exactly.
That
exactly.
Be, right?
Right. Or people will give away like gift cards or things like that.
Okay.
So those are all legitimate tax deductions and business expenses. Meals. The idea with meals is that it's if you're going to, like a restaurant, and it has to be with someone else. It can't just be by yourself unless you're traveling. So if you're traveling, it can be a meal by yourself if the travel is for business purpose. But say you're in your hometown and you go to the restaurant, and you think because you take your laptop to Panera and you're working on your work at Panera, you can deduct that meal. Well, not really, you can't. If you had a person there that you were meeting with and you're discussing things with, you could then. So there's some little nuances to that. Website costs, definitely any kind of, domain fees, things like that. Postage, shippings, definitely. Health insurance. If you're paying your health insurance yourself, like you don't have a job, your husband, your spouse, or whoever you don't have health insurance any other way, and you're paying it privately, that can be that you definitely want to make sure you make note of that on your tax return, because that can be a huge deduction, as you know, because it's very expensive. Subcontractor help. So a lot of times you might get to a certain level where you've got a huge team and you can't keep up with all the little nuances and every little thing to do by yourself. So people will start hiring people to help you facilitate your team, doing little jobs, and you're going to be paying them. And that's what you would call it. So now you would have a subcontractor under you. Whatever you're paying them, of course, you would be filing that as a tax deduction. And of course, a home office. That's a whole other little kind of wax, I guess you could say, when you get ready to do taxes at the end of the year. But there are certain aspects of working from home that you can deduct. If you have a space that's 100% devoted to your business. So in other words, if you're working out of your bedroom, you can't really consider that your home office. But if you have a spare bedroom, or an true office space or whatever, that is the only thing you do in that area is work your business, and that's your business. You call it your business space. that can definitely be considered a tax deduction. And it's based on square footage. There's a lot of different factors that go into that. And it kind of depends on at what complexity level, how deep you want to take it. But the main thing that you would want to know is what's the square footage of your house, and what's the square footage of your home office. There's two different methods. There's called the simple method and then the multi-step method. And the simple method is you just get $5 per square foot, and that's your tax deduction on that. But if you actually are renting like an apartment or a condo or a house, there's actually, you can get a bigger home office deduction in other ways. And if you have more questions about that, I'd be happy to talk, but it's a little bit more in-depth of a discussion. But anyway, main point is there's definitely a tax deduction for home office, and many of us are using home offices these days. So that's not a big surprise. So, so we talked about this a little bit. Is clothing a deduction? I think we kind of covered that. It, again, possibly not. Again, if you are just using the clothes for personal use, it's really not. But if you're buying something, if you're buying a product, because you guys come out with like new products, like what, every month or
every Wednesday?
Every Wednesday.
Yeah.
So, I know that there's a lot of, like you have to buy these things.
We don't have to buy. I personally don't buy everything. I mean, a lot of us do. We do get some of the stuff. It does help to show ourselves in the pictures and different outfits and
right.
And we share pictures with each other. So
So yeah,
buying it myself, it's not just gonna be for like my group of customers, but I also tell my team, hey guys, feel free to use this picture. So it's like,
right. So your whole team works together with that. That's so awesome. That's a great way to do it.
so that's a tax deductible, right?
Right. I wanted to say one thing though. I can't remember if I made a slide on this or not, but did I make a slide on it? I was on selling the clothes. I think you had asked me about that.
Oh, yeah.
Right. So if you have all these clothes, I can only imagine what you guys' closets look like. You gotta, I'm picturing 100 pairs of leggings in a room somewhere.
Not far from the truth.
So yeah, you can sell them. You can definitely secondhand sell those things you see fit. Oh, I did think I make a slide on this. Where was it? I thought I did. Oh, I don't know where it is. Maybe I didn't. We'll talk about travel next, but the clothes is the main thing with the clothing. If you sell it, guess what? You're making more money. So you need to keep track of what you're selling it for, what you make on the sale of the clothes. That's actually income to you. So you would have to keep track of that as part of your earnings as well. There may be sales tax implications. If you actually sold the item for a higher price than you paid it, then you don't want to do that, because then, first of all, I think that would be really difficult to do. But you could get into having to pay sales tax. You don't want to have to do that. So travel is another big blurry area for a lot of people on what they can deduct with travel. And I know, again, right now, it's not as big of an issue, but the way it used to be back when things were normal, I know people are traveling a lot. They're going to conferences. They're meeting. Your teams are all across the country. So you're making team meetings. You're saying, okay, we're all going to meet in New Orleans for our team meeting. And so everybody's traveling places. So, but what is actually deductible with travel? You can't deduct the cost of a whole trip just because you went to a location and you did some work there. So say I'm going to fly to Honolulu, Hawaii, and I'm going to open up my computer and I'm going to work my business there.
Take a picture.
You can't do that. You can't do that.
Take a picture for proof, right?
Yeah. Well, yeah, but I hear that. Although people say, but I'm doing posts there and I'm doing, doing, you know, social media posts and stuff
doing posts.
to support my lifestyle kind of thing, right? But the thing is that the location has to be specific to why you're there, and that's really not a legitimate. It can be helpful to what you're doing, but you can't deduct it for tax purposes. So the travel to a location, if travel is to a location that is integral to work being done there, in other words, you're going to, if your whole team.
Give you an example. So in January, we went to Thailand. It was a company elite earned trip.
Right.
So we earned the flights, right? But if the flights weren't paid by the company and were paid out of pocket, that is a deduction, right? Because it was a business. It was. I went there because of the company.
Right. If you are meeting people from the company there.
Mm-hmm.
So in other words, if you said that your whole team, hey, our whole team is going to meet in Honolulu and we're going to have a team meeting and we're going to get together and we're going to learn things from each other. We're going to share things from each other. We're going to have a guest speaker. We're going to work on some new creative ideas together. And because you have to all to get together in a location at the same time to do that, that could be tax deductible.
Okay.
And, you know, if it's associated with your company's having speakers, you're having to go to meetings, you're having to go to conferences, you know, things like that. Like if you have an annual meeting somewhere, that is definitely a tax deductible travel. There has to be a connection to the income generation as a result of the travel. So you could argue that I am equipping my team, I'm equipping myself, and we're going to be better. We're going to be better at our businesses as a result of meeting together.
Are you guys thinking, Paula, that sounds like a great idea, Cindy? Paula, take notes.
but you can't necessarily say we're just going to go to this place and have fun the whole time. You actually do have to do work. You actually do have to do, you know, you have to say that you're in meetings together, you're doing something together where you are working. Whether that's talking about the business, how you're doing things, strategic things like that. So if you were ever questioned, you know, if you were ever audited by the IRS, that's what they're going to say. They're going to say, well, you know, show me some support for that. So you may want to have like a calendar. You may want to have like handouts that you had. What did you use during this time? That was showing me that you did actual work for that.
Go to Instagram, go to Facebook. You'll find
so much. You can recreate the whole thing just from from your online footprint and what you're doing these days. You know, Instagram and everything that would prove that. So this is another tool that I'm going to give you, this spreadsheet. This might look familiar to Paula. I'm sure it does to Carlos.
Yeah,
not
like,
Paula.
best friend, not mine. But when he pulls it out, I'm like, I'm out.
He's really good. You know, I believe that you guys actually have your own QuickBooks file, which is another thing that you can do is sign up for QuickBooks online, and you can learn to use it yourself, and it links your bank account in, and it tracks your expenses and things like that. We can help you. We've helped clients kind of navigate that and learn it. It's really not hard. But this is a really easy way. I'm going to give you guys a spreadsheet. I'm going to send it to Paula, and she can send it out to you guys.
That's why it's so good to have. I have a card that is just for business purchases. So every time I'm going to order something. So when Hitler decides to take care of the books, he sits me down on the chair. He's like, okay, what's this with PayPal, Venmo, this, with this. I'm like, oh no, but it pulls it from the bank, which is great because everything is paid. If you pay things cash, like if you go to the post office and you pay cash and you don't save the receipt, you can't claim that. If you go down for coffee and you pay and you're with a customer, you're showing the catalog, the clothes, everything, and you pay cash, you don't have, if you don't save the receipt, and then I have a bag with all the receipts, but also things are online nowadays, so the tracking.
There's so many ways that you can recreate, you can find out. I have here, utilize your bank and credit card account records. Online bank access, credit card access, you can go back through basically and you could just print out every single month statement, and you could go through and just mark it up and categorize it. This spreadsheet is something that we use that just shows that, hey, you can just put these amounts in the months and it'll total it up. We give this to a lot of clients, and when they come in and say, hey, just go in, look through your bank account, your credit card accounts. You have to categorize. The thing about the taxes is that you have to categorize all this stuff. You just can't just give them a total number, because the IRS wants to say, does this look reasonable that they would have this much in postage, that they would have this much in internet costs? So that's why they want to see it in categories. And you may have a category that's not here, and that's perfectly fine. It's really important though to stay up on it and stay current and don't get behind. You know, I would say do that. Some people do it monthly, some people do it quarterly. I recommend quarterly. When you start doing it in April of 2020 for 2019, it's really difficult, because sometimes you have to remember, like you said, Paula, like you're going to go, gosh, what was that to Amazon? Why did I buy that from Amazon? I don't know. You know, it's those Target, Amazon type, just Walmart, you know, Costco purchase that you can't tell what it is from the transaction on the statement. So it's good if you can stay up on it. Don't forget about the mileage tracking. There's a section on here for that. And to just save all your tax documents. It's good if you can save actual receipts, but I know that it's not absolutely necessary anymore, because again, you can kind of go in through a lot of different online records. But if you do, like if you're at a restaurant and you get a receipt, write on the receipt who you had dinner with and what you talked about, or something, just a word, you know, you were with, you know, your downline.
I don't leave my house because it's too hard to track.
or say you were with someone who's not with your business, but they're maybe a potential client, a potential you know, rep that you're trying to recruit. You know, you're always hustling, aren't you guys? Always working the hustle, right? Oh, this was the reselling of product samples. I knew somewhere. We already talked about that. This is my tax tip. Don't spend $1 to save 30 cents. So in other words, if you're thinking, oh, I need to get a tax deduction, well, you don't necessarily think you have to spend $20 in order to save $3. That doesn't make any sense. So remember that you're not trying to make tax deductions. You're trying to make money and make use of your tax deductions. So bottom lining it, kind of steps to minimize your tax liability, meaning how much you're going to owe. Track your deductions, track your mileage, file, pay your taxes on time. Because if you don't file and pay your taxes on time, the IRS will assess penalties and interest. So they don't joke about stuff like that. And it can really turn into a lot of problems, a lot of money. You have to pay a CPA and all this stuff. And you just don't want to get yourself into that. Be wise with your time. Again, like I was saying at the beginning, this may not be your jam. You don't want to have to sit there. You may not have a Carlos that's doing all your stuff for you, and you're like over your papers, you're over your all these numbers, and you've had it. And so what you're doing is you're wasting all your time being overwhelmed when you could be out making so much money with that time, right? So if you can hire a subcontractor to fill in that spreadsheet for you, if you can, you know, find somebody that can do this cheaper than what you're going to be making, it's just being wise with your time. If you need to hire a professional to help you, it might be a good investment to do that, because it just enables you to do what you do best. Another thing that I can also suggest is consider moving sometimes. You know, the kind of work that if you become full-time doing this,
Florida,
you can do it anywhere. It doesn't matter where you live. You can live anywhere. There are some tax-friendly places Florida being one of them, Texas, Tennessee. There's a few states that don't have state income tax, and those are 3 of them. I mean, there's always more things to consider than just taxes. I completely get that. Family, you know, schools and all these kinds of things. But if you're just looking at that, I mean, it's just something that you may want to consider. And then at the end of the day, once you get to a certain level, again, like Paula was saying at the beginning, you may want to consider.
We got a question here, and I think it's regarding that. At what point do you have to start thinking of quarterly taxes when you've earned
Quarterly taxes?
You even mentioned monthly, ideally.
Yeah, quarterly. If you really have to start thinking about them really soon. If you're making more than probably $10,000 a year, you need to start thinking about paying quarterly taxes on that income. So now I know that once you get, the more you make, the more frequent you need to pay in. There's ways that you can kind of work it, but it is something that you need to kind of consider, because otherwise, like the government, when you do your tax return and you put your money down, this is how much I made, and you haven't paid anything in yet, and you say, oh, I'm just going to wait till tax return time, which is, a lot of people do it, and they do it intentionally because they say, you know what, I'll pay the penalty because I'd rather pay it. I want my money to be with me rather than with the government, and so they'll wait. And they'll pay the penalty, and they'll be happy with doing that.
I pay daily. Jen. Carlos. No, actually, I have to tell you guys the reasoning. I have to tell you the reason why this came about was because somebody asked a question in the Double Zaya executives chat, and they said, hey, my uncle said that I'm paying the taxes wrong. And anyway, so I come here with my ignorant answer saying, no, like, we're self-employed. We pay that once a year. But I always have the doubt. And then Tracy, I think Tracy's here on the call. Tracy's, she retired from her job, but she was a CPA. And well, you still are, right? She carries the knowledge, and she said, no, you should actually be paying it quarterly at least. I'm like, babe. He's like, oh yeah, Cindy gave me these vouchers or this thing. I'm like, oh snap, we need to be paying this thing. And I'm like,
well, I mean, a lot of people don't, and they end up paying with penalties, and you don't realize it because you just go, I just pay whatever they tell me that I owe.
Yeah.
But so, it's better not to. I mean, everybody's a little different with what they feel, their kind of philosophies on that.
So if you're already an independent business employee as a consultant working as a 1099, do I pay self-employment tax?
Yes, that's what I'm talking about next, self-employment tax.
Oh, there you go. What are these blue lines? Is this me?
I don't know. Just.
Where's that coming from?
I don't think I did that. I didn't even move anything.
I don't know.
I don't know.
Totally cool. Okay, so.
How did that happen? I don't know. Oh, that was my grand finale. I don't want to go there yet.
Okay. Wow.
Okay, so are you ready for a formal business structure? So this is kind of what Paul and I and Carlos have been kind of walking through lately. But once you get to making over probably around 75 to 100,000 a year, you definitely want to consider this, because what you're doing is you're paying too much in taxes. So which I need to actually, I got to go back to that first screen about this self-employment tax. And these two slides kind of tie in. The self-employment tax, so you had a question about that. It's 15.3% of your business profit, okay? It's somewhat the same thing as the FICA or Social Security and Medicare tax that's deducted from your W-2 paychecks, okay? So this is the way the government's getting that, it's getting that by telling you that you have to pay a self-employment tax. Now, the kicker on this is that 15%, 15.3% is in addition to income tax, which can be 10 to 37%. Now, nobody's in the 37%. That's way, way up there. But you're probably more like 10 to 20% in your income tax bracket on top of the 15. So that means you could be looking at 35% of taxes on your income. So that sounds like a lot, right?
My money, give me my money.
I know. So, but that's why you need to be thinking about this, because most people just think it's just income tax, but no, it's this, they do just, why is it so high? It's because you have this self-employment tax. But the self-employment tax is eliminated if your business becomes an S corp. It's a different kind of an organization, and so then it's eliminated. And when you way you pay this, it's all a part of your personal income tax return. So when you do your personal income tax return and it gives you the bottom line of what you owe, it's including the self-employment tax. Okay, so which leads me to this is you might be ready for the formal business structure. When you start making more earnings, you start doing this full time, you're making $75,000 to $100,000 a year. You really need to consider this, because when you do this, you don't have to pay the self-employment tax. It takes that out. What you do is you start paying yourself as an employee. So you become an employer of yourself, and you're the employee. Your business becomes an official LLC. You come up with a name, you register it with the state, you become an LLC. You have to get a tax professional to help you with this, to file some forms, so you can get recognized in the eyes of the IRS as an S corp. And then you end up paying yourself a salary, and you only owe that Social Security and Medicare tax on the salary that you're paying yourself, not on the entire amount of your profit. So if you're making $100,000, you may say, okay, I'm only going to pay myself the salary, this W-2 salary of $50,000, and that you only owe that Social Security and Medicare tax on that portion. That doesn't mean you don't have the whole other income. It's just your take-home income is comprised of two parts. It's comprised of your W-2 income then at that point, and your distributions from your business. So you're still end up with the same amount of money, but you just basically pay less taxes. Right now, before you are this, what you are is you're a sole proprietorship. Mm-hmm. I don't know how these blue lines happen.
I don't know. Is that your mouse?
No, because I consider moving it. I didn't even touch it. I don't know. That's weird. Hacked.
So funny.
It's the Russians. Something. Okay.
The TikTokers, I don't know.
Yeah. So that when you're to this point, that's when you definitely need to engage with a tax professional to help you walk you through that. It's very important. Another thing that this gives you is it gives you some liability with your business. It gives you some protection there. It does require some extra expenses associated with it. It has an extra tax return that has to be done. That can be a little bit more pricey to pay a CPA to do. And you probably would need a CPA to do all this. So it does come with some costs, but you end up saving probably about at least $10,000, even with the extra cost doing it. So it's definitely worth doing. It depends on how much you make, of course. Mm-hmm. So why are these marks still there? Oh, it's not my pretty picture. So anyway, that's kind of it. If anybody has any other questions, does anybody have any other questions they want to throw out there? Or
yeah, we do have some questions here on the side, and I know that you guys, even if you're not in Florida, if you want to maybe set up a consultation, right, Cindy? They can.
Yeah, we have clients all over the country. I mean, that's just, we get so many referrals from all these, our clients all over the country, just about every state in the country. So I put my contact information here. And I'm sure you can send it out if you want, Paula. Check our website out. There's a button there to request a consultation. And if you do that, just kind of maybe make a note that you heard about it at the Zoom meeting, and that they'll be able to kind of make sure they'll funnel you into me. But what are some of the specific questions?
Okay, give me a second. I'll read them to you. Okay, so here's the website. Okay, so let me start from the top. If you set Ashley says, if you set up an LLC but don't make that much yet, can you just leave it? Like, do you have to do anything with it? She said she got
No, you can do that. You don't really have to. There's, you have to pay, usually most states ask you to pay maybe $150 a year to keep the LLC active. You don't really have to do that, but you can, but it's not necessary. It's not necessary.
Did you guys all catch Cindy's office information? If you want to catch it, take a quick picture, and then we'll take off the screen share. It's still there. I don't know where those blue lines came from, but do you want to hit the stop sharing, or do I do it?
There we go.
Oh, ta-da. There you go. Hi. No blue lines. Okay, and then okay, so another question is $75,000. Okay, when we were talking about the ideal or the
right,
5,000, is that combined with your job, or is
good question? No, that means strictly from the business.
1099, right?
Yeah. Mm-hmm. Now, if you are representing multiple companies, I don't know if Zaya allows that. Some MLMs don't allow that. But sometimes you might have a few different income streams going on that you're getting 1099s on. They can all be combined into one business. Like you could call it, the name of your business could be something general, just like your name. It could be like, Paula Chavez LLC or Cindy Ketchum LLC, and, or enterprises or something kind of general like that. And you could put all of your 1099 income together. So combined all your 1099 income. Once it gets about 75,000, that's when you definitely need to start thinking about that. And also it has to be maintained. So sometimes you want to make sure that you're not just peaking out and you're going to drop. So it has to be kind of like maintaining that kind of level as a minimum. So you want to say, oh, I hit 75, I just hit it, I'm going to do it. Well, I don't want to make you have to spend all this money and go through all this if next year it's going to drop down and you're not really going to save any money from it. So, so you really have to make sure you're going to sustain that for a few years.
I think it gives you kind of like boost of confidence, like
it legitimizes what you're doing.
I'm official.
It does. It formalizes it and it legitimizes what you're doing.
Legit. Yeah.
As a business owner, and you learn a lot. You learn a lot by going through the whole process. You learn a lot.
So, okay, another question. Let me see. Is the quarterly taxes a thing for Canadians too?
I don't know. I hate to tell you that. Don't know about that one. I would think so, though. I wouldn't be surprised. I mean,
it makes sense what you said to me. The government wants you to pay taxes as you're earning it.
Yeah, they consider, I mean, in America, in the United States, they consider, their taxes owed to them as you make the money. So I wouldn't be surprised that it's something similar to that. It may be different levels, maybe different, thresholds on that. I would venture to say you could probably Google it and find maybe some answers on that. Sometimes Googling stuff is confusing with taxes because you'll find contradictory information. But I can look into it. Definitely. Call me at my office or email me. I can look into it.
Thank you. Thank you, Cindy. Okay. And then do we need to get with a CPA quarterly to file and pay?
Not necessarily. What you may want help with a CPA is estimating how much you may owe in taxes. When you do your tax return, you should be getting, it does kind of generate these vouchers that show what you should pay quarterly for the following year. It estimates for you what you should be paying. But if you're doing a business like you're doing, where your income is maybe growing a lot more in 2020 than it did in 2019, those vouchers are going to be too low. So you may want to engage a CPA and say, hey, here's my information. Here's that spreadsheet filled out. Can you tell me how much you may think I'm going to owe? Now, there's other information you're going to have to give them. You're going to have to tell them if you're married or single, if you've got kids, what's your spouse's income, things like that. There's other information that they're going to need in order to calculate that and to determine that. But you could do that. Probably this time of year is not a bad time to do it. You don't want to wait till April and find out, because think about it, in April, you're finding out what you owed in 2019. You're 4 months into 2020 at that point. So you're not only behind the ball with previous year, but the clock's ticking on the current year that you're in. So, so it's kind of good to have an awareness of what that is. But generally speaking, I would say, you want to maybe pay in 30%, something like that.
And you may have said the figure, but do you suggest we save? So when we started making income that wasn't like necessary for like the main, like, we needed, at least for us, we needed the income to go food shopping. We needed, so there wasn't much being saved, but the minute there was a little extra, we started saving it in a savings account. We started saving it. And then Carlos said, okay, we got to make sure we have the money for the taxes. I think maybe even the first year we had to pay, and we didn't have it saved, but we were able to pay it. And then it was 30%. And then I heard once from Grant Cardone, where he said, if you raise your income, don't raise your lifestyle right away. Save an extra 10%.
Absolutely.
So think whether if you have that, as you start earning more, it doesn't matter. It's 30% or 40%. So we started saving 40. And once we had a little cushion, we started paying off credit card debt. So little by little, we were chipping into those little things. So I want you guys to, this is why I thought it was so valuable to have this conversation, because usually money is a taboo. Nobody wants to talk about this. And if you add on top of that you don't like numbers, it's repelling that conversation. And at the same time, you're repelling money and abundance and all these things. No, let's embrace this thing. Let's take ownership of it. And with that in mind, the sky is the limit. Like, it's crazy.
Yeah, you don't want to, you want to have your arms around what you're really making, and try to maximize what you're doing well, and don't spend more than you have. And like you said, I think that's really wise, is to start out with, don't keep your lifestyle the same for as long as you can, so that you can develop that cushion. And then it gives you more potential later, buying a new house, buying a new car, things like that. But, you again, keep in mind, your earnings less those deductions, that's your taxable income. And then you want to put the 20-30% on that taxable income amount on that. And if you're getting up there and you're starting to earn more, you want to check in with a CPA and start figuring out ways to minimize that and streamline that. Once you do become an LLC and an S corp, business bank accounts and things like that are really important, and you paying taxes maybe even monthly at that point. So.
And it's also going to avoid you issues with your spouse, because if next tax season comes and you spent it all, they're not going to be happy. I've seen it happen where husbands get so frustrated and so upset that the business is costing you more, but it's because we're not being smart about it. So I always hear from Ray, my coach, he's like, take care of your money, take care of your money, take care of your money. And it's
we have clients with MLMs that are making millions. And the common thread that I see with a lot of these ones that are really successful are people that are that are really strategic with this kind of stuff, and they know where their money's coming from, and they know where their money's going, and they monitor their bank accounts, they monitor their credit cards, they're on top of it. And honestly, even as a CPA, I don't really necessarily do that that great with my own. You know, it's easy, just everything's automated just to not pay attention. But if you really want to, when you know where your money's going and you're budgeting and you're on top of it, when you're doing that spreadsheet and you say, gosh, I really spent a lot on blah, 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 blah in July. What the heck happened? You start seeing that you're just more mindful of the spending. You're more mindful of it. And it just is kind of like this intrinsic-y kind of background subconscious thing that it just makes you a better business person and makes you better business owner. But that is definitely a common thread that we have seen with a lot of these business owners like yourselves. And you guys are just sitting on such potential. I really would love to be able to see you guys just do that, be really equipped to do that.
Yeah, and I know for us, I mean, Zaya has blessed us so much. It was another big part of that is the giving. Like, make that part of not me, and keeping all, but the more awareness and the more, just it creates that mindset that in giving, you get that feeling, I don't know, but don't you feel good when you do like something for others that you know they can't pay you back, that they don't even know that you did that for them and it helped them in a way? Like, getting in the habit of doing little things like that, like paying things like that. We do sometimes go to Starbucks and pay for the person behind us. Like, I would go buy coffee just so that I can pay. It feels so good, and then escaping before they can say thank you or whatever. It just feels good, and it creates this habit and this mindset like, man, it feels good to do things for other people, and it makes you kind of like want to work with more intention, be more responsible with your money, not waste it in silly things when you can be doing good. I don't know. That's just the way that I think. Definitely not the same person that I was 2 years ago, a year ago, 6 months ago. It's all, I don't know if you guys have heard the saying, money is a magnifier. If you're a good person, you're going to become an even better person. With more money, you become a better person. If you're a bad person with more money, you're not going to become a good person. You're going to be a worse person. So let's not make it a weird topic of conversation, but also not let it become an obsession in a bad way. Just being smart about it. The whole point of doing this is creating residual income, creating financial
freedom,
flexibility, freedom, all those things. So I'm really, really thankful, Cindy, for being here. Do you guys have any other questions? I'm proud of you guys for being here. I know it's late. It's Tuesday night. I know we also had a yesterday, so it's like, I promise you there's no meeting tomorrow. We gotta work. We gotta go make the money we're gonna pay tax.
You guys gotta go sell them leggings.
Super helpful, right? I think we all need to, let's take a picture. Let's do, so I am going to do something really cool, you guys. When you post this in your Instagram stories, if you want, tag me. Cindy, do you guys have any social media pages or anything?
They have Cooper. They do have a Facebook page.
Okay. Okay. So if you guys want to,
we're not really on the cusp of all that.
I know you're basically taking care of business, so it's fine. But if you guys, the point of this is share, show people. I always talk about show the behind the scenes, how we're doing, how we're growing, how we're learning better. So post it, tag me. I'm doing a couple of drawings for prizes. You'll see the winners announced tomorrow morning. I saw that Luisa did. Yeah. So we'll do the drawings tomorrow. And Cindy, again, you are amazing. I'm so excited to put a face on the name.
I know. Well, me too.
God, I can't wait to give you a hug when it's like.
That's awesome. So thank you guys. I enjoyed being here. And again, I'll send you, Paula, tomorrow. I'll send you, I was going to send you guys that spreadsheet and just my contact information for everything. You can just kind of like blast it out to people.
So good. Yep.
So, but hit me up if you need anything. I appreciate it.
Thank you so much. Yes. Thank you, guys. Thank you, Cindy. You're amazing. Bye.
Bye.